Hey, how's it going, everyone? Welcome to the Relationship Marketing Podcast. Today, I'm joined with Eric Boshart, owner of Parallel Lending. How's it going today, Eric?
Good, man. How are you doing?
Doing awesome. Thank you so much for joining me. I know we've been connected online and through social media, and I thought what you guys were doing was really cool. You have this great lending business helping people and also helping people get returns as well. So, give us a quick summary of what Parallel Lending is.
Yeah, so parallel lending is a real estate debt fund. We provide short-term business purpose loans backed by real estate, primarily in Texas. So we provide loans to flippers and builders, looking to either purchase a lot or purchase a home that needs renovation. And then we provide the construction portion of the loan as well. Usually these are around twelve months long and a little bit higher interest than banks because we provide, speed and a level of service that maybe banks wouldn't. And so we've been doing it all around Texas, primarily in DFW, but we like Austin as well. We like Houston, kind of the major metropolitan areas here.
Awesome. I'm an investor myself, and I'm really interested in funds. So when I saw your fund, I'm like, what is this? This is really cool. And you're actually putting into the real estate that you can see too. So, what's your experience? Like, why should I invest in your fund? I know you've got a really great background.
Yeah, for sure. So I got my start in kind of the finance industry through, oddly enough, media and entertainment. Went to grad school at UCLA. Kind of got my foot in the film industry on the finance side, and so we provided a lot of tax credit financing, distribution contract financing. And that was great for my, ability to underwrite and do due diligence on a project. And then after that, I kind of got, it was a great time to spend my 20s in Los Angeles on the finance side, and then decided to come back to Texas to start flipping properties with my brother. And so we did this primarily around 2018, 2019. We started flipping homes. We built up a rental portfolio primarily of single family homes. And then over the course of 2021 and the first half of 2022, we decided to sell a good portion of our rental portfolio. We looked really smart in timing the market. In reality, we just got pretty lucky. And then we were sitting on, some capital. We were trying to decide what to do with it. We knew that we wanted to stay, continue to flip homes. We knew that we wanted to stay in the real estate space, but we didn't know exactly quite how. And then, in the second half of 2022, over that summer, the Federal Reserve just started really spiking interest rates, and so that was a wild time. It was unprecedented. We had this kind of runaway inflation, and everyone was really nervous, and so Federal Reserve just really clamped on that. And so we thought, wow, this is a really interesting time to be in credit. So we said maybe we should start lending out, our funds to other investors. And we had taken out the type of loans that we're now giving out, so we kind of knew the
Okay.
process. We knew which lenders we liked and which ones we didn't like. We knew how to underwrite these loans. We knew what processes we wanted to emulate. And so we just started lending out a couple of loans here and there, just to our community, just to our friends, just to see how we like the process. And turns out, we got addicted to it. It was
That's cool.
incredible. We got to see, other people's investments, other people's flips, other people's builds, kind of, realize in real time. And we really consider ourselves as partners to them. We really took a qualitative approach to our lending. We wanted to deal with good people who really cared about the projects that they were working on. That was really important to us. And so we thought, banks are tightening up. There's a lot of lenders in this space who, were really aggressive over the course of 2021 and the first half of 2022, lending out at single digit rates, going really high on leverage. And then when interest rates started rising, the 10-year treasury started rising, therefore mortgage rates started rising. It was a really interesting time because a lot of their portfolio was in workout mode or a little bit underwater. Properties were sitting a little bit longer. If you provide 100% financing and things go down by 1%, it's technically underwater. And
Yep.
so we were fortunate enough to not have any baggage coming into our lending
Okay.
business because we had never done a loan before. So we were able to price things, based off where the market was, and it had changed so drastically. And we're still in that, we're in an easing cycle, so to speak. Rates are dropping, but we're still in a high rate environment. 30-year fixed in Texas are still hovering in the sixes. 10-year Treasury still in the low fours. So, we're seeing this high rate environment kind of stick, especially with the results of the election. People are worried about the policies that our president-elect might put in place, that might trigger more inflation. So the yields are reflecting that, and that's not a political opinion. That's just what the market's telling us. And so while we're staying in that high rate environment, it's still a really good time to be in private credit. And so we're really bullish on this industry, and really bullish on Texas in general.
Now, if I was interested in getting into a fund, and you just mentioned quite a bit where you look for those personal approaches, seeing your business, you're in business with your brother, right? It's a family run business. Touch on that real quick for me because I think that's important. I want to invest in, yeah, real estate or people or a fund in people that I know, that I trust, that are relatable, I feel like.
Yeah, yeah, for sure. So there are two aspects to our business. One is on the borrower side. The way that we kind of underwrite is, again, that really qualitative approach. All of our borrowers know us on a first name basis. Typically, as part of the underwriting process, we like to do a site visit to the property and
Nice.
uh, and 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 meet with the borrower and kind of interview them. Back in the old times when you wanted a loan, you had to put on a suit and go to the bank and meet with the person, and they would kind of judge your character and say, okay, this person will have the ability and the willingness to pay back the loan. We don't go quite that far, but we do like meeting with our borrowers and establishing that relationship. And it's really, if we wouldn't want to invite them over to a family dinner, we probably wouldn't want to give them money either. And so, we have this kind of, in addition to our quantitative underwriting, which is very strict, we also have this kind of qualitative approach where we're trying to build a family within Parallel. And we actually named it Parallel because we want to run parallel to our borrowers, path to financial freedom. And that's really important for us. On the investor side, for our accredited investors who have invested in the fund, it's really important for us to, have that really strong relationship with them, understand their goals. We have a very specific fund with very specific terms and,
Yeah.
kind of features of the fund, which I'm happy to kind of get into a little bit. But that's really important, is to kind of understand their goals, understand why it is that they're investing in a private offering. The S&P 500 is doing really, really good. Why would you invest in something like this when you have that?
Yep.
And so, with that, there's a lot of features that are really attractive to our investors, and we've got some, really great feedback from them as well.
Okay, so that's perfect. Good timing. Why would somebody invest in you over, the markets or something different? Maybe
Yeah, so
touch on that for me.
Yeah, for sure. So I think, primarily, anybody that's wanting to get into real estate, there are a few different things that you can do. So this is considered kind of an alternative asset class. It's real estate credit, real estate debt. So it's not that correlative to, S&P 500 or even bond yields. It,
Right.
it, it is a little bit, but it's not completely correlative. So people who are wanting to get into something a little bit different, that's still very secure. We're primarily first lien position on all of our loans. Again, they're short term. There's a great kind of cushion between what the property's worth and what we're lending. And so that's number one. Is
Cool.
it's just a different thing to invest in to kind of hedge your risk when you're looking at a portfolio allocation.
Yep.
When you're wanting to get into real estate, there are a few different things that you can go buy a single family home and rent it out. And people call that mailbox money. Well, it's not quite mailbox money. You still have to manage the property. There's still,
Yep.
there's leaky toilets. There's you have to reserve for CapEx in case a roof or a water heater or something bad happens. Even if you get a property manager, you still have to manage that property manager. We
Yep.
still do that, and that is not passive income. When you invest in parallel, it is truly passive income. You are getting a distribution every month, and you have the option to reinvest that distribution into the
Mhm.
fund. And so you get some really sweet kind of compounding effects to your investment over the life of it. The next thing is there's a 12-month lockup period. So the other option, if you wanted to get into real estate, is you can invest in a syndication. You could put your money as a limited partner into an apartment complex or an industrial warehouse or some office building, although I wouldn't recommend the office right now.
Right.
Um, you know, th that is, that could command a really great return. But at the same time, that's a 3 to 5 year lockup, and you can't take out your money. And usually, you're not seeing a whole lot of cash flow or distributions until kind of the last year or two. So this
Okay.
is monthly distributions as soon as the money is invested in the fund.
Uh-huh.
And then after 12 months, you can take it out with no penalty. And so, our investors really like that. It's a very kind of liquid investment. The other thing is the collateral protection. It's very, 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 very secure in terms of we can go and look at the properties that we're collateralized against. There's heavy cushion. Our borrowers are experienced. Our borrowers, know how to build and know how to flip. We're on the insurance docs. We get title insurance as well. So
Okay.
people like that it's just backed by real estate primarily in the first position. And then the last thing is me, my brother, and our other business partner have, a lot of experience in flipping and in building ourselves. And so, uh, history with kind of understanding what goes into renovating a property. A lot of our competitors, I was really surprised. A lot of our competitors aren't investors themselves. They don't
No.
flip, they don't build. And so, when you're looking at a budget, how do you know if a roof should cost 7,000 or 10,000, which is a big difference. It only comes with that experience. And I have a license. My brother has a license. I have my appraiser license, which really helps in kind of understanding the value of the home, especially
Okay.
what the property is going to be worth when it's complete. That's called the ARV, the after repair value. And that metric is the most important metric that determines our cushion, that determines the borrower's profit. If that number fluctuates either up or down, it drastically affects the deal. So we need to be really, really specific and exact when we're coming up with our after repair value. A lot of times it's different from what the borrower thinks. A lot of times it's different from what, the wholesaler thinks. So, making sure we get really granular on that detail is super important. So I do all the valuations in house
Oh, you do?
because
Cool.
yeah, because I've just been I've been appraising for a few years now. And um, I actually go and walk the property and measure it and do the full analysis in house.
I think that sets you apart, pretty dramatically. The fact that you have that experience, but you can go walk the land and walk the house, and you can see, okay, this is going to be a great flip or this investment, or it's not.
Yeah, totally. I mean, we don't have $1 billion under management. We're not on the West Coast or the East Coast. We have one Dallas-based office. This is where my family is. This is where we live. This is where we operate. And so you don't get that kind of service or kind of market knowledge when you hire things out to a third party, when you have, when you're on Wall Street, and you're accessing money from different institutions, this is this is all our capital. This is the fund's capital. And so, yeah, we just like to keep everything in house and keep it all a family.
Love it. One question I had when you were talking about that is, let's say I want to invest in your fund. Do I get to see those properties you all are actively investing in?
Yeah, absolutely. So we have an investor
Cool.
portal.
Okay.
So once you get kind of signed up, or even before, we can kind of share a summary of all the offerings in the fund, and you can see what stage they're at. We keep pretty detailed records of where they are in the construction phase, because we release the construction portion in draws as line items in the scope of work are completed, and
Okay.
so we have those very specific phases. And so you can see, oh, this one's in Austin, this one's in Dallas, this one's in Houston. They really like this borrower who's building, who knows this zip code like the back of their hand. So yeah, we like to give as much transparency as possible to our investors, and they love the before and afters too, and I do too. Our borrowers are good at what they do, and so you see these houses that are just in total disarray, and then you get to see this finished product that's just like, it's amazing, and that gets us fired up every day.
That probably just keeps you motivated to keep the money in the fund and keep reinvesting that, seeing the great progress and then seeing the returns after they sell or get rented
Yeah,
out,
yeah.
right?
So yeah, pretty much most of our borrowers choose to uh to stay in the fund, obviously, and then we've also had reinvestment of equity capital, and also a reinvestment of their distributions. Most of our investors do that, and again, there's those compounding effects that are it's the great magic of credit and investment is compounding that original investment, and our investors are doing well. I think right now our annualized return is 11.6, I believe, just above
Wow,
11.6. So our
it's
target's
huge.
11.5, so we're just above our target, which we're really excited about, and I think we're gonna continue to perform, over the course of 2025.
I like the personal approach you guys take, and then you're investing in something that I can see and I can touch almost. And I mean that if you can keep that up even as you scale, I think that's going to go a long way, which probably will be hard to do once you scale up to where you want to be.
Yeah, yeah. The scaling question is one that's on our mind all the time. It's like, how quickly do we want to grow? How big do we want to grow? We don't accept investments all the time. It is an open-ended fund, but sometimes we think that we're growing too quickly, and we want to make sure that we're on top of all of our loans. And then other times we want to be aggressive. We want to go. We're in kind of a sprint mode right now over the next couple of months, as kind of real estate goes into hibernation mode. I think this is where we can kind of gain an edge, but keeping that qualitative approach to lending, and keeping the borrowers in our family and investors in our family, and knowing the addresses all off the top of my head. The day that I can't remember an address that we lent on is going to be a sad day. That means it's going to be bittersweet. That means we're growing, but we're not that means it's just not part of the family anymore. So
Well,
it's a question that's on our mind.
it'll be safe to assume the people that you do hire to do that, you'll build that relationship and trust them as well. So
Exactly, exactly. So yeah, we're excited about the next phase of our business. At the same time, keeping our hands on all of the private offerings, all of our borrower relationships. That's going to be important for me and my two business partners.
what does next year look like, or maybe the next 1 or 2 years look like in your eyes, if you could vision it out?
Yeah, I think we're trying to raise enough capital to kind of fund the actionable opportunities that are in our pipeline. I think there's an imbalance right now between people looking for money and the capital constraints that we have right now. We have good borrowers with good properties and good deals looking for funds, and we our capital is lent out already, and so. I think for us, it's always going to be kind of raising capital to fit the opportunities. And once we hit that balance, then it's just servicing our portfolio and making sure that we're that we're underwriting effectively and we're staying on top of things. I think 2025 is going to be a great year, just in general, especially in Dallas. We're seeing a supply shortage that isn't going away anytime soon.
Oh,
Um,
really?
uh, yeah, I mean the bulk of our portfolio is fix and flip, existing properties, but we're seeing that change. And so we're seeing a lot of people getting more into building. There are just a lot of unused, infill land across Dallas, especially South Dallas, but all over the place uh, where I think that's where the bulk of our origination is going to come from over the next, 12 months. And, we'll see what the Fed does. That, if Jay Powell sighs or breathes heavily, like I'm in tune. If he says one word, I'm like obsessed over those press conferences. I'm obsessed over what they're doing, what Wall Street thinks they're going to do next. I think they'll probably cut in December and then maybe hold in January, or maybe it's going to be the other way around. That's what Wall Street thinks right now. Um, I think bond yields are going to go down a little bit. You would hope that helps with affordability when the 30-year fix goes down as well. So uh, I think it's going to be really strong in Texas specifically. I'm not sure about the national market. There is no such thing as a national market. It's so local, but I would say. I would say Dallas is largely insulated from those wild swings. Like even
Yeah.
in, oh 07, oh 08, we saw, asset values decline so rapidly. And I think Dallas declined, like under 7%,
Yeah.
even during the worst of times for real estate. So I think we're pretty protected here. So I think the next 12 months are going to be really exciting.
Some great businesses there, so that definitely keeps people there and keeps them wanting to move there. Now, if somebody wanted to invest in your fund, do they have to be living in Texas, or can they be really anywhere?
They can be anywhere. It's for accredited investors, so we're not allowed to accept non-accredited investors. But they can live anywhere. They can invest through their IRAs. We have a few investors who do that. That's great because you don't have to pay taxes on that, and always consult with your CPA about
Yeah.
those types of things. But that's a really great kind of investing strategy that a lot of our investors take advantage of. But any other further information on investing, reach out to me, go to our website. We can send you our full kind of investing summary and what that looks like and what it takes to qualify. There aren't a lot of hoops to jump through, and our minimum investment's 50,000. Our average loan size hovers around 200,000. So we typically like one investment to fund one loan, but we will accept the minimum as well. But any other information, feel free to reach out, and we'd love to take care of you.
Cool. My last question is I always like working and speaking to businesses that are involved in their community or in nonprofits or whatever. Are you guys involved in anything like that?
Yeah, yeah. So we donate a portion of our net profits to a few different causes. They're more shelter-related causes around the DFW Metroplex, and one of our partners lives in Dripping Springs, just outside of Austin. And so we donate a portion of our net profits, and this is GP profits. This doesn't affect the LP's returns. This is our take home. But yeah, with this, otherwise we wouldn't be doing it if we weren't helping the community in some way. And because it's a real estate credit fund, we want to invest in real estate or shelter related causes. So it's at-risk youth primarily. Giving them a home. It's crisis centers as well. So we're really blessed and thankful that we have the opportunity to do that. And we also let our borrowers know and let our investors know that, hey, because you took a loan from us, or because you invested in our fund, this is the impact that you made in your community. And so, being a socially conscious lender, the bottom line isn't always the bottom dollar. It's about helping, where you can.
100%. Well, Eric, that was awesome. Appreciate you sharing the story. And I think every business should be more like you guys, just that relationship first, personal, family owned, like looking for any ways you can help and just do honest business. So I'll give you guys credit for that. That's really cool.
Thank you so much. I appreciate that.
Yep. And so where's the best place for people to reach out? I know I'll of course link the website link down below. Do you post anything on social media or any other additional education on this?
Yeah, all of our accounts, X, Instagram, Facebook, is Parallel Lending. You can reach out to me at Eric, ERIC, at parallellending.com. You can go to our website as well, www.parallellending.com. There's a place specifically for our investors. You can fill out a form and get more information on the fund. We'll send you our deck. We'll send you, more details on investing. But we try to be everywhere. So, even if you Google parallel lending, you should be able to find us.
Awesome. That's cool. Well, thanks for sharing your story and thank you all for watching. And of course, if you guys have any other questions on investing like this, reach out to Eric, click on the website down below. And he's a great guy and he'll connect and just answer any questions for you. So thanks again for watching. And I hope everyone has a good rest of your day. And thanks again, Eric.
Thanks so much, Brad.